The CFPB has issued 6 final rules on its own, and 1 final rule in conjunction with the FFIEC agencies such as the OCC, Federal Reserve Board, NCUA, and so on. And it's issued 1 proposed rule. These rules total over 3,500, almost 3,600 pages of regulations and changes and amendments to Reg Z, Reg B, and RESPA. And there are a lot of things credit unions need to be aware of within these rules. Our article that will appear in the March issue of CU magazine will attempt to tell credit unions maybe 8 of the key issues we think they should be aware of. The rules cover the ability to repay with qualified mortgage requirements. That's a key issue. Credit unions will have to comply with that if they want to have the safe harbor that protects them from litigation for qualified mortgages. That's a key issue within that rule. The mortgage servicing rule will impose a requirement for credit unions to issue periodic statements on a monthly basis for mortgage loans, for all mortgage loans. HELOCs currently are under a requirement for open-end loans to have periodic statements, but this new requirement under the mortgage servicing rule will impose a requirement for closed-end mortgage loans for a periodic statement to be issued on a monthly basis. And there'll be a lot of information that will be required within the periodic statement. The loan origination rule will impose more requirements on loan originators in terms of compensation they're allowed to receive and who they're allowed to receive compensation from. There are 2 rules, one issued by the CFPB and the FFIEC agencies, another one issued by the CFPB concerning mortgage appraisals. There are a lot of requirements in that area credit unions are going to have to be aware of. There are new escrow requirements. Currently, credit unions are required to provide escrow accounts for higher-priced mortgage loans, first lien higher-priced mortgage loans, for a period of 1 year minimum. This new escrow rule will expand that time period from 1 year to 5 years. So credit unions will have to provide escrow accounts for first lien mortgage loans that meet the higher priced mortgage loan definition for at least 5 years on a minimum basis. I think what they have to do is look at their current compliance program, maybe quickly check with their forms providers, their statement processors, and the core processor to see what changes they have to make by June, and start working with them immediately.